Hi, I'm Cade,
And I'm Bobby.
and welcome to the Newstead Group's Explainer series.
Okay, Kate. So a lot of people think that the most important thing about your home loan or the most important reason about going through a broker is all about the interest rate. And it's partially true. The interest rate does matter.
A lot.
But
Yeah.
are you able to tell me about the extent or the ability that your broker has to negotiate your interest rate?
Of
Whether
course,
it's
yeah.
pre-lodgement, post-lodgement, post-settlement?
A lot. Yeah, we do have an upper hand when doing an acquisition. So when you're looking at buying a place, we do have a little bit more of an upper hand because the bank's trying to win your business and acquire your business. But I want to talk a little bit more about post-settlement because that's probably more important. You'll see all the rates from us as brokers. We'll present them to you. We'll negotiate, and we do. But let's talk about post-settlement. It's you've moved into your place, or you've refinanced your property. You've got your new home loan set up. What does it look like 12 months down the track? Because you don't want to be doing this every 6 months and moving banks or buying a new property or just for the sake of keeping a low interest rate. So as brokers, we have, I personally use what's called a floor rate. Floor rate's basically where we think that the market should be based on the current competitive offers that are out there. So when we look at that particular aspect, our goal is to make sure that your loan does not go above the floor rate. If your loan goes above the floor rate, it's no longer competitive, and we need to either reprice you down below that floor rate, or we need to move you to a different loan provider. So we manage that in the background.
Okay, so your loan settles, you've got a really competitive rate, you're happy with that. So over time, does that rate move?
It does.
Okay.
It can be quite volatile in nature actually, unless it's a fixed rate loan. It's a little bit of a different story. But if it's a variable rate loan, yeah, we do see some movement on those. We might see small increases over time. We do call it a term called loyalty tax when you stay with the bank for a long period of time.
So that's an out of cycle rate
It
increase.
can be an out of cycle rate increase.
Let me say that like not linked to the RBA cash rate decisions.
Correct. Yeah. So when you hear all those, the cash rate's gone up, the cash rate's gone down. Sometimes banks will out of cycle put their rates up, and it might only be for a small amount, but all of that accrues over time. And it's our job as brokers to protect you from those changes and protect you from a market that's unfavorable to you. So we will keep tabs on your home loan, do check-ins every 3, 6, 12 or 24 months, depending on who your bank is, and ensure that you remain competitive.
Okay. We don't want people paying more interest than they need to.
No, and the other thing as well, just to note, is that we don't lose any money or commission from getting you a more cost-effective loan. It just doesn't work that way. It's great.
So we are motivated to make sure that our clients have a competitive rate.
That's correct.
If not with their existing bank, we can have the conversation of finding something more competitive elsewhere, as long as it's beneficial and achievable.
Exactly.